This is Commodity Wrap. I'm Tony St. James. Halfway through a week and a full week of trading following a 4-day trading week last week, and we're rushing our way towards the end of the month. And with the end of the month comes, some expiration of some contracts, and so just something else to kind of throw into the mix of what we talk about. Speaking of the mix, corn lower. That makes 4 consecutive sessions lower for the corn market. Soybeans settle higher. Soy meal lower for the 4th consecutive session. Soy oil higher again. All 3 wheat exchanges in the red. That marks 4 consecutive closes lower for hard red or Kansas City. And the cotton market kind of breaking out and moving higher as well. And that's how our row crops kind of settled on Wednesday. But let's find out why they settled that way. Brian Hoops, President, Midwest Market Solutions. Brian, let's kind of break these down. Is it headlines? Is it technical trading? Is this fundamental trading?
Yeah, it might be a little bit of all of the above there, Tony. So let's look at things here. You know, last night we had some information coming out of President Trump that he was going to back off of the 145% tariffs with China. And he wasn't going to fire Jerome Powell, and things are maybe improving with China. But I think today, we opened stronger off that news. We thought we'd open higher in the grains. We did. The stock market gapped higher on the opening and rallied. And from there, we didn't really add to any gains. You know, the grain markets have kind of distanced themselves from trading along with all these tariffs and the news, especially the corn market. Corn was the least affected by the tariffs, as we only export about 15% of our corn crop. It's the soybeans that would be more affected if we did reach an agreement with China and they did make an agreement to buy soybeans. That's the commodity that they would probably come after. So that give us a little bit of support to the soybean market, but it was talked about today that we're maybe 2 to 3 years away from reaching this agreement with China, and the stock market gave back some of their gains off of that news as well, that maybe we're getting too much into what President Trump had to say. So if you look at just the fundamentals, there's better chances for rain in the safrinha corn growing areas that would produce a large crop, which would compete with U.S. exports, and that means lower U.S. corn prices because of increased supply competition. Also, weather in the United States looks a lot more open for planting conditions. We're going to need some rain eventually. We may get some next week, but there should be a lot of corn being put in the ground between now and next week. And then you look at the wheat market. Winter wheat crop badly needs a drink, and it looks like very good rains on tap for Kansas and Oklahoma and Texas regions. So fundamentals were, a little negative here for the corn and for the wheat. If you believe in the demand improving because of China, that's what supported the soybean market today. But overall, another day where we're kind of choppy, two-sided, trying to feel out where this market is going. But like November beans closed about 10 cents off of the overnight highs that we put in because of the news from President Trump.
Okay. Some of the other news that we had, and I thought we got kind of a bit of a bounce this week from this, but J.D. Vance, Vice President in India for 4 days, met with Prime Minister Modi, and it basically come up with the guardrails, if you will, to start the negotiation of some kind of a trade and security agreement. I don't know if it's going to necessarily be a free trade agreement, what that will look like, or any of the details there. But the fact is he said, we want you to buy U.S. energy. We can help you with U.S. energy, and we want you to get rid of the non-tariff barriers, trade barriers, and you can start with ethanol. I thought that was a pretty big statement on that international stage, but it's not really translating over yet. That headline, at least, isn't translating over to higher trade. Is this a show me kind of thing before we move?
It's probably going to have to be, because we're having right now so many news items and headlines and tweets and comments and interviews, and President Trump has another interview this afternoon at 4 o'clock Central Time. There's so much information that contradicts what is said one day to the next. I think it's getting very frustrating for farmers and for traders alike, because there is not that continuity that we want to see. Markets don't like this uncertainty. Traders don't like uncertainty. And there's a lot of uncertainty right now regarding what our trade is going to be, what our policies are going to be, and when these trade agreements are going to be in place. Once we can have a little bit better, clear direction, then I think we can get back to maybe more normal trade. But this herky-jerky type trade, it's very frustrating to a lot of people, and so that may be why people are reluctant to buy into it, because it seems like anytime you buy into something, very shortly afterwards, there's something else to contradict that statement.
I mentioned ethanol before we take the break. EIA ethanol production last week increased 2.1% to 1.03 million barrels per day. That's just under 43.4 million gallons per day. Year over year, that's an 8.3% increase, and it's 7.5% higher than our 3-year average. Ethanol stocks falling to a 14-week low. Exports, 3.2 million gallons per day. And how about imports? No ethanol imports now for more than a year. We'll take a break. We're back in a moment. This is Commodity Wrap.